Let's look at one of the megatrends. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. We have a megatrend called mass surveillance. Now let's scroll a bit. You can see that the performance is quite significantly more than the S&P 500, so it is definitively a strong trend. So here are the companies in this theme. So you have those who produce cameras, more general surveillance, weapons detection, advanced imaging. In this video, we will look at Everbridge. They are into what I call just notification systems. It is a bit of a lackluster performer, but let's look at it a bit more closely. So here is the company's website. So how we help. So critical events happen every day. Severe weather, quite relevant. Workplace violence, active shooters, terrorism, IT and power outages, environmental discharges, critical equipment, a lot of stuff. And they threaten safety and brand reputation, interrupt supply chains, and disrupt operations. A bit wordy, I gotta say, but they basically have this notification system. So here you can see their solutions. So alert residents and visitors, automate IT incident response, accelerate clinical response, anticipate and prevent disruptions to operations, and keep employees safe everywhere. Okay, very interesting company, and especially relevant with what is happening now with the big freeze. So here is EVBG, the ticker for the company, and the seasonality. Looking at the last 6 years, because that is all the data we have, it is rather bullish for February and March, seasonally. April and May are also strong, but we have to be a bit careful because we do not have that many years of data, but what we have is definitively on the bullish side. Looking here at the charts, like that. So it's been on a very nice and relatively consistent rally. Up 816% from the IPO. That's definitively a pretty good return. As we can see, it has had some pullbacks in the past. We have this here and we have this, and this here is the recent pullback. They can be a bit significant. But as we know, buying low and selling high can be very, very good. So from this high to this high, that's 61%. But if you were able to buy close to the low, so this rally would be 174-ish%. That is obviously a lot better than 61. The reason why this company popped up on my list today is that there is something interesting happening now. We have what we can call, an inverse head and shoulders. So we have a bit of a messy shoulder, a bit of a messy head, and potentially this pullback could be the right shoulder. That is a bullish technical pattern. It is still developing. It could of course break down because there are two sides to the market. You have bulls and you have bears. Though the company does have exposure to some very interesting themes. So far, it's looking a bit bullish here. The correlation here with S&P 500 is 74. Looking at the daily data points, so RSI is basically in the neutral zone. It has been more oversold in the past, but basically it is just flat neutral. The PPO is at one of the lowest levels it has been. Okay, here you can see, this inverse head and shoulder-ish, rounding bottom-ish as well pattern. Seeing a little bit of a pullback. It's been a bit erratic. That's just how some patterns develop. But overall, there is this bullish recovery story. And you do have, a potential breakout up here. 29% correlation here with S&P 500 short term. So definitively quite different. The accumulation distribution, it has been able to hold on relatively nicely, even though we have not made any progress. We haven't seen a breakdown in the amount of buying happening. If you look here at Finviz, they draw a support line here that we bounced from. There is resistance up here, but that could also, be a breakout level. Options are available. It is shortable. Performance is a bit all over. Well, I mean, obviously it's going to be less because of a pullback, but it is all about buying low and selling high. The target price is what I find especially interesting. So you do have some big name analysts, Oppenheimer, Credit Suisse. If we go here and look at the tools. So here is the analyst price target. Here is the current price of the stock. So they suggest a 16.30% upside. That's interesting. That is bullish. Saks.com, they do have a number 3 hold, so basically just in the middle, F value, but there's a B growth score. And these two are, the scores based on, fundamental analysis. This C, that is based on, more technicals. And as we have seen, it has been forming this pattern that explains the C score. Okay, so to sum up my take here on Everbridge, I think the theme is very interesting. Definitively very bullish. I think that long term it is just a trend. Given the situation now with Texas and the big freeze, a company like this becomes even more relevant than it was. And there's as we saw in their list, I mean they have exposure to all kinds of events. So they are very specialized and very relevant in any kind of situation. The chart, we did have an inverse head and shoulders pattern. That is bullish. We did also have the seasonality that was bullish, but we don't have that much data. The fundamentals were very interesting. Very interesting, especially the analyst price target that suggests a meaningful upside. So they suggested around 16% upside, and if we do measure that 16%, so from the current level, so 16% around here, that would constitute a breakout. So not only would you have, the fundamentals, then you would also have, that breakout situation, which can quickly become a catalyst for more upside. So yeah, taking all the evidence together, I find it easier to make a bullish case for Everbridge than a bearish one. So looking years into the future, I'm bullish, and I also think I would lean bullish looking at the coming weeks and months. Even though I would classify it as a bit, it is a bit speculative given that different markets are rather elevated. It would be interesting to see what happens to Everbridge if we do see, let's say, some breakdown in the Nasdaq, which is, the tech, well, heavily tech index ETF, and frankly, the S&P 500 has become much more heavily tilted towards tech over time as well.